to IVCA Conclave 2017. I have with me Mr. Dhanpal Jhaveri from Everstone Capital. Thank you so much for speaking to us, sir. What are your key takeaways from the IVCA Conclave?
I think the conclave is focusing on many relevant things, especially around the way the private equity industry is organized in India. There are strong undercurrents where the world is looking at India as an investment destination.
Sure.
And I think IVCA acting as a catalyst, bringing together LPs, GPs and market participants together in a 2-day intensive conclave is, I think, a good way to, one, educate market participants about what's happening, what are the changing trends, and two, for GPs to discuss ways to basically make the business a lot more robust and a lot more I would say greater opportunity for people to generate more returns.
Sure. If you can tell us a little bit about the buyout trends that are currently prevalent.
So this is a recent phenomenon. If you saw the entire, I would say, buyouts from a financial buyer perspective was almost non-existent 10 years ago. Right. In the last 10 years, we've seen several seller as well as buyer behavior and therefore motivations change to the whole buyout industry. I actually classify buyouts more as controlled growth, not as buyouts in the Western sense, which was a largely leverage plays where they would put in a lot of leverage in an acquisition, transfer that leverage to an operating company, and using financial engineering create more returns for their investors. The Indian buyout market is more a controlled growth market where financial buyers are taking control of businesses, infusing or inheriting very strong management teams and building businesses to create value, or what I call alpha, in those businesses to eventually exit them at a multiple of what they got into.
Right. What have been the trends, sir, that you've noticed in the exits, in 16-17, and going forward, your outlook for the current fiscal?
I think it's a very interesting phase we are seeing in India where all potential form of exits are almost, I would say, firing equally. You classically see 3 ways that private equity or financial buyers can get out. Sure. One is doing a sale of their position to another financial buyer. So whether you're a minority investor also, you could go and sell to another financial buyer. 2 is the IPO markets, taking the company public and exiting through that process. And 3 is basically selling to large trade or other financial buyers. And we are seeing heightened capital market activities. We are seeing a significant amount of interest on the M&A side, where trade buyers as well as financial buyers want to buy and own assets. And we are also seeing healthy buyer-seller demand in terms of the secondary market. So the flows, overall flows, I look at it, just the Indian mutual fund industry gets about $2 billion a month, which has been, again, on an annualized basis, never witnessed in terms of the amount of capital which is being deployed in the equity capital markets. From an FI as well as an FDI perspective, we are seeing historical highs in 2016 that India has ever witnessed. More capital coming into India to invest and buy into businesses. So we think it's a pretty special period where the world is recognizing India as a market where they could come in and create value in the long term. And it's a fantastic position to be in for a country to try and use this wisely, use capital wisely, and create real value and create real returns for global investors.
Sure. Thank you so much for speaking to us.
Thank you.